Don't let the presidential election be your investment indicator. Presidential elections, especially this one, make people become very emotional, but don't let that sway you away from investing. Looking back to 1950, the S&P 500 index gained 12.1% per year under Democrats and 7.1% per year under Republicans. So based on that tidbit of information, you would think that Democrats are better for the stock market than Republicans. Well, if we dig deeper, we will see that Nixon had a major negative impact as he left office in August 1974. This was at the end of the 73-74 market crash when the S&P 500 was down 48%. The other Republican who had bad timing, well, was George W. Bush, who was in office from 2001 to 2009. The S&P 500 dropped 38% in 2008 during the Great Recession and wiped out all the previous gains in the stock market while George W. Bush was in office. Looking more recently, there were investors who hated Trump as president, and when he got into office, they sold their stocks, missing an average annual return of 13.8% per year while he was president. The same thing happened in 2020. When Joe Biden became president, many Republicans thought the world was coming to an end and sold their stocks. Well, the gain in the stock market under Joe Biden so far has been 11.9% average annual return. The best advice I can give you is do not look at the president for any type of analysis on stocks. There are so many other factors at play rather than just who is in the White House. Instead, I recommend you look at the equities you are investing in and ask yourself, how will they do going forward? Ultimately, businesses will find ways to succeed regardless who the president of the United States is. So be patient, don't get emotional over the next few days as the election kind of comes about. I'm Chase Wilsey with Wilsey Asset Management. Stay ahead in the investment world by subscribing to our YouTube channel and weekly newsletter for the latest economic news, expert analysis, and market insights.